Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
All right, let's kind of stay with this theme. We want to get more on the latest from kind of the view in terms of the U.S.-China relationship, where it goes, and the broader global economic implications.
Let's get the latest from one of the most important market economists in the world.
Nancy Lazar is with us. She's chief economist at Piper Sandler, leading the economic team and view there. She co-founded Cornerstone Macro, also co-founder and former vice chairman of ISI Group. Nancy, so delighted to have you here with us. Does feel like a shift between the U.S. and China. How do you see it?
Well, first, I think it does lower dramatically the odds of a recession. Something from 45% were our odds yesterday down to about 25% today. Two, we're going to raise our GDP forecast slightly as a result. Not strong growth, but a little bit better than what we had, and keep the unemployment rate pretty tame. It seems like it's all about tariffs, but I would highlight it's more than just about tariffs. One, it is also about getting clarity on tax legislation, which we're going to see as we go through the summer. Two, it's more and more signs of deregulation, which are already happening. Those two things are really important, as our lower tariffs are really important to small, medium-sized businesses. And so the tax cuts, the deregulation are going to be offsets to these tariff increases through the long haul. And then third, there's also a huge manufacturing renaissance theme that's been unfolding for 15 years by our count. And obviously, the tariffs are going to further increase the odds of more and more onshoring. So at the end of the day, net, we think this sets a pretty positive scenario for the back half of this year, particularly the fourth quarter and into 2026. Things have changed. This has been very dynamic. It has not been a static analysis. And we didn't know on April 2nd that we were going to get China down to 30. And there's potentially downward pressure on that 30 if we can address the fentanyl issue. And fentanyl shipments in the United States have indeed declined sharply. So I would take the more positive view than your prior guest.
What about scarring is a term I heard a lot of this morning, Nancy. So some things you just can't unsay is how Mira Pandit put it.
It's like a bad fight. Right, in a relationship, there are things that you just don't forget. Are
our allies, I mean, you talk about reshoring, right? Supply chains are bound to move now that everyone knows you just can't trust this administration. You just can't trust this country as a business partner, as a steady business partner.
I'm not sure I would say you can't trust the United States. This has been a negotiating tactic. This has not been, and it's been certainly has come across very, very bullying. I would agree with that. But it's been effective. There is a case to be made that the Germans, for example, would not have increased defense spending had we not put them in somewhat of a difficult situation. And same for companies onshoring into the United States. We need these strategic materials to come to the United States, pharmaceuticals, technology, et cetera. They weren't moving. Well, actually, they did move. We saw what happened when you gave them a carrot with the CHIPS Act. Indeed, you did get semiconductors, but it was limited to that. So the tax legislation actually is going to potentially be a real boom to companies onshoring into the United States, in that you will get full CapEx EQP expensing and also the cost of the construction of the factory immediately instead of over 30 years. So I've traveled a lot internationally over the past month, and I appreciate what you just said. I certainly heard that a lot. But the United States is still the largest economy in the world, biggest consumer in the world. So increasingly, if you sell it here, you make it here.
Well, the biggest complaints, though, Nancy, that I've heard are not international or from big multinational corporations. The complaints and the concerns, really the fear that I hear, is from Main Street. It's from small and medium-sized businesses that, as we know, also do the bulk of hiring and the bulk of CapEx in this country. Those are the companies that just can't make it through 2 or 3 months of this kind of uncertainty, and a lot of whom are going to be filing for bankruptcy this year. So how do you deal with that hit on the economy?
Yeah, so I totally agree with you. The SMID space is a very, very small, medium-sized businesses are a really important part of this economy. They account for over 80% of the jobs in this country. And it was one of the reasons why we were so concerned that we were going to go into a recession with the egregious tariffs up until just this past weekend. So totally share that view. That's where you have to look at the whole picture. You do have maybe China's tariffs do come down a little bit further. 10% apparently is the floor. And you get tax relief, and you get deregulation relief, helping to cushion that SMID space from the higher tariffs.
Hey, Nancy, I am curious, can we be both a manufacturing hub here in the United States and be a really innovative high-tech country going forward? Can we be both? And I'm curious what kind of economy that together creates.
So again, what they're strategically looking for are these industries that we have to have in the United States, as we all learned during COVID. I don't need to review that, but I've written about the manufacturing renaissance actually for 15 years. It's been ongoing, and you need it to be able to hire a diverse group of people. People have different skills. Not everybody wants to work on Wall Street. Not everyone wants to go to college, and there's nothing wrong with that. So the key to the manufacturing renaissance or manufacturing in general is the economic multiplier. For every manufacturing job that's created, there have been 6 non-manufacturing jobs created. And again, we've documented this over the past 15 years. It has been unfolding, and these policies, particularly the carrot, particularly the write-off of your factory in the first year, will further onshoring here in the United States. It's yes, I mean, innovation drives factories today. Robotics, key, software, key in utilizing those innovations in factories.
I'm kind of glad you went there. Our own Steve Mann, who covers the auto sector, said, one of the things that we have overlooked is that all of the production, manufacturing, automation that China has done has helped it advance technologically in a big way. And it's something that we haven't been doing and missing out. What's the big risk?
By the way, those automakers that invested massively because they loved Trump's new version of the North American Free Trade Agreement, right? The USMCA.
Yeah.
They're paying the price for trusting him now, right?
Yeah, exactly, right? Well, that's the
thing. That's the kind of uncertainty that's problematic.
Nancy, here's the thing. Boaz Weinstein of Saba Capital, right?
Saba, yeah.
Saba, forgive me. He has said the uncertainty genie is out of the bottle here with President Trump, that we're not going to really know. Things could change, make a 180. We know that. Do you still believe that we've got to be kind of aware of that, even if today feels calmer and more optimistic?
Absolutely. Again, this is clearly still a period of uncertainty, but there's going to be more clarity as we go through the year, and hopefully by 26, a lot of the uncertainty is gone. Clarity on tariffs, taxes, deregulation, and onshoring. It's not unusual for a new president to come in and shake the tree. We had it that first year under Reagan. Volcker was tightening aggressively. They were squeezing inflation out of the system. Reagan also wanted to cut taxes, which indeed he succeeded in doing, trim back government spending. He fired people. He brought in an outsider, Greenspan, to make Social Security solvent, which he did. We threatened the Soviet Union. He threatened Reagan. Reagan threatened Volcker. I started in the summer of 1981, and I thought maybe I made a mistake moving from Michigan to New York. But the people I worked with were very senior. They understood that the long haul for this was going to be a healthier economy. I'm just comparing the economic times. We needed a change back in 1981. We need a change in the economy today to broaden the growth in labor force participation for all types of people, all sorts of education. And you do that most clearly through bringing manufacturing back to the United States.
Now, I was going to ask about manufacturing because Ralph Schlosstein was in here the other day, and he said, we peaked at like 20% manufacturing jobs in the 60s and 70s. Now we're at 8%.
Yeah.
Right. Even if we get a lot of onshoring, maybe it becomes 8.5 or 9. But I love that you bring up Ronald Reagan, Nancy, because like most other people, I have a problem scrolling through social media all day long, and I see all these clips. Reagan was a huge proponent of free trade. Reagan was a huge proponent of immigration. And since you started in 1981, how would you compare the Gipper to Donald Trump?
I'm not comparing the men. I am comparing the economic times. And careful on that free trade idea. My colleague, Karina, actually discovered an article highlighting that Reagan negotiated hard with the Japanese to pull back sharply their exports of autos to the United States, which indeed they did. And the next thing you know, the Japanese were indeed some of the first foreign manufacturers to actually build plant in the United States. So I thought that was a very interesting tidbit.
I'm going to follow her on Instagram. Karina, what's her at? I'll follow her on social media.
Hey, listen, just 20 seconds. You're optimistic today. Have you been optimistic since President Trump came into the White House and we've seen the volatility of the month of April? Have you had optimism throughout?
No, well, to be sure, on April 2nd, we did go to a recession call.
Okay.
Given the egregious nature, I'm all for lower corporate taxes, deregulation, and again, I've been passionate about manufacturing renaissance. It was not a political move on my part. It's because I'm from Flint, Michigan. I saw the destruction to my hometown from the gouging out of manufacturing. And it's one of the reasons I'm an economist, to better understand why factories are such an important foundation for any country. China understood it.
Right.
That's why they joined WTO, and it did initially create a pretty strong economic backdrop.
We're going to talk more about the U.S. labor market and green and climate energy jobs. We're going to do that with former Washington Governor Jay Inslee on the other side in just a moment.
They still have those?
Hey, yes. Nancy Lazar, thank you so much. Chief Economist at Piper Sandler.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
All right, TikTok, everybody. About 18 minutes to go until we wrap up the trade on this Monday. Carol Massar, along with Matt Miller, in for Tim Stanovic on this Monday, May 12th. We're kind of hovering, Matt, near our best levels of the session, up about 3% on the S&P, 2.5% higher on the Dow Jones Industrial Average. Nasdaq 100 charging ahead by 3.6%.
It's so funny. You get used to this. You get used to this kind of volatility over the past month or month and a half. And so today feels like nothing. You know, and we're looking at this incredible rally. I mean, it's so strong. Mag 7 stocks are up 5 or 6%. These are $1 trillion stocks.
But it's sort of like,
yeah, no big deal.
It's a little boring. Let's see what Doug Sioka has to say about it. See if he thinks it's boring. He is CEO and partner at Kavar Capital Partners. They've got about $1.5 billion in assets under management. With us once again from Leawood, Kansas. Doug, nice to have you here with Matt and me. Does it feel a little boring? I mean, it's a rally, get it, but it feels a little mellow.
Yeah, I think it is. I think Matt's right. I mean, you just get preconditioned to have this become more the rule than the exception. And you know, it's funny, when we went on that kind of magnificent 9-day run of the S&P in the latter half of last month, and it was preceded by a 1,000-point down day the Monday after Easter, which was preceded by an 800-point down day on Holy Thursday. So, yeah, I do think a little bit anesthetized to the intraday price swings. But, yeah, there's no way. I mean, from a historical outlier perspective, today is a very significant and extreme day, and does really invoke this whole concept of not trying to time the market. Right? I mean, you don't want to miss, as everyone knows, those 5, 10, 15 best days of the year. I read something this morning that really underscored that point, that if you miss the 10 best days in 2023 and 2024, your return for the year as a stock investor was 3%, where the S&P on average was up 20% in both of those years. So that really does, create the understanding that you've got to stay invested in order to participate.
Although, have you talked with anyone, Doug, after April 2nd, after we got the reciprocal tariffs on Liberation Day, and the markets just puked for like 4 days straight, so many people that I talked to said, man, I knew this was coming, and I stayed fully invested, and I wish I'd gotten out. I wish I'd sold before, these massive tariff announcements were coming out of the Rose Garden, and now you've got a chance to get out. Right now, we're 2% above April 2nd. So have you talked to anybody who regretted not selling and could do so today?
Yeah, for sure. I mean, I think the regret is real easy. Hindsight is always super clear. And the one thing I think maybe, Matt, that people could be forgiven for thinking they have that omniscience is that this is trade war 2.0, right? And the interesting part is that if you look back 2018, because remember, Trump was inaugurated in 17, but it took a while to kind of get some momentum. Shoot, it took 5 months to get his cabinet seated. But if you go to 18, you think, well, 2017, GDP was up 2.9%. In 2024, GDP was up 2.4 to 3%, depending on your last gauge you want to look at. And you look at 2017, EPS growth was 12% year over year. 24, 25, 12% year over year. So you had this precondition that was mirroring what took place in Trade Port 1.0 and 2.0. Why didn't we all sell knowing this was going to be the result? We almost had the exact same drawdown in 2018, intraday minus 20.06, 2025 minus 21.35. But you have to know then that this is the primary time to get out. And if you take 2019 and forget the pandemic piece in 20, but it was a great period to stay invested once you got through those lows, and that's kind of where we are today.
So what are the catalysts now? I mean, okay, 90 days with China. There's probably like 90 days left for TikTok.
Maybe the catalyst is it doesn't get worse.
Everybody else gets on the trade front. Maybe it doesn't get worse. But are you really looking for a bump from tax cut extensions? Are you really looking for a bump from deregulation? Do you think onshoring is going to drive this economy in 2026? What do you look forward to?
So I think there are a lot of things. Number one, to your point, the 90-day reprieve, it's happened really quickly, right? Because Trade War 1.0 lasted 18 months, right? Started in 18, and the Trade War Accord or agreement was signed in January of 2020. So this was much faster. But if you do overlay the one differential from the other things I mentioned about strong earnings growth and strong GDP growth, 18 versus 25, we have a Fed that is not going to be raising rates. Right? In 2018, the Fed raised rates. That's a headwind. We have prospectively a tailwind. And how smart does Powell look by now at this point by waiting and not cutting when they met last week or a couple months before that? I thought that was brilliant. I think valuations, while full from a market cap weighted perspective, are still really attractive. Going into today, guys, 43.5% of the companies in the Russell 3000 are still down 30% from their 52-week high. So if you broaden out and consider investments, and you made mention, Matt, about a 4 or 5% move in the Mag 7, the Mag 7 stocks on average, again, before today are still down 12% from their peak.
Right.
But on a PEG ratio, aren't all that expensive. So we think if you look down sort of the cap spectrum and even continue to consider internationally, where you have a dollar trend hugely positive for U.S. investments in international companies, you have earnings moving in the right direction in Europe, Japan, and emerging markets, there's still places to effectively put some money. Oh, and in the fixed income universe, you can lock in with some duration a very, very handsome positive real rate of return.
You note that investing since early April, Doug, has been more like playing video games and analytical decision making. So Can we now start doing some analytical decision making, knowing that we have a White House and a president, I'm just speaking the truth, that can change his view and mind and rhetoric and do a 180, in any given day or in any given week? So I'm just wondering.
The great question, Carol, and maybe it's just a different type of video game. Maybe it's more like Minecraft and Frogger, where there is going to be a little invocation of some strategy. But I think when you go through periods like that, where trying to be effectively tactical is futile, you've got to fall back on the three primary activities that encompass a very responsible strategic allocation, right? There's still stuff to be done: tax loss harvesting, quality overhauling, emphasizing beta, right? If you do feel like, as I just mentioned, certain parts of the market are undervalued, cast a wider net instead of trying to be company or sector specific, because those are the areas where you stand to have asymmetric risk with whatever random Truth Social tweet that might be coming down the pike with God only knows what the catalyst would be.
He changes his opinion on things, but he's loved tariffs for decades, right? Tariffs is one thing that he's not going to stray on.
But that's why I'm saying it's not like he's going to back off completely. And even if the tariffs come down, we're going to be in a higher tariff rate environment. I mean, I think that's going to be the net. Does that, Doug, potentially, even if it's 10%, it's not the 2.5% that we've seen, changes things fundamentally for a lot of companies? And just got about 25 seconds here.
Oh, I think it does. But I do think, to Matt's question earlier about, is onshoring going to be a catalyst? No. I mean, we have a 4% unemployment rate in this country, right? We are not going to be reliant upon like domestic manufacturing to be great sneaker producers, right? We want to look for trade balances, and we know that we're going to get different iterations of some of these new agreements.
Right.
So that's going to be better for growth. That's going to be better to decline inflation. And frankly, that's probably a point with the strength of the consumer and the strong job market, Carol. These lower tariffs can be absorbed without being a huge impediment to growth.
All right, Doug Sioka, CEO and partner at Kavar Capital Partners.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right. I do want to point out, everybody, just a little bit of a backdrop. 2 U.S. science organizations are launching a new climate research initiative after the Trump administration dismissed expert authors of the National Climate Assessment. Now, the initiative will publish peer-reviewed manuscripts on climate change in the U.S., aiming to create a library of information for government, academia, philanthropy, and business. The effort coming after the Trump administration terminated the contract for staff working on the 6th National Climate Assessment, which was expected to be released next year. We know that there's been a lot of moves pushed back when it comes to green initiatives out of the Trump administration. Our next guest, I'm assuming, will have some thoughts on all of this. Joining us is Jay Inslee, former 3-term governor of the state of Washington, former member of the U.S. Congress, a 2020 Democratic presidential candidate, winner of 2025 Time Earth Award, and he's also leading the accountability project at the policy and lobbying group Climate Power. And he joins us from Bainbridge Island, Washington. Great to have you here with us, Governor Inslee. Thank you.
Thank you. Appreciate your attention to this topic.
Well, there's a lot I want to talk to you about because I feel like you are someone who has seen lots of political and economic cycles in the United States. And before we get into jobs and green initiatives and green jobs in particular, the U.S.-China relationship, how do you see it? How important is it? And how do you assume it will ultimately have to play out, because these are the 2 largest U.S. economies and they're intertwined?
Well, obviously, there's not much debate about how important this relationship is. And we're all very disturbed and concerned about the president's desire to make life more difficult for Americans by forcing them to pay the Trump tariff tax, which we know Americans will have to pay if he is successful of imposing these large tariffs. We are all pleased this morning that some news that Trump is already sort of giving up on this ruinous tariff of 145%. That's good news, but we shouldn't give him the Nobel Peace Prize, because it's like the arsonist starting a fire and then he wants credit for being the fire person to put the fire out. He started this fire. We hope it gets put out and that we have more reasonable trade relationships on a reasonable basis. Well, we hope that that'll be the case. But it hasn't borne out yet. Having
said that, I think both Democrats and Republicans for several years now, and if you think about through the Biden administration, some of the tariffs imposed on China were certainly continued through the Biden White House, that most on both sides of the political aisle have agreed that the relationship between U.S. and China maybe wasn't a fair one. It wasn't balanced. And so something had to change, especially as China's economic might has changed and grown.
Well, listen, there are some reasonable things you can do, and then you can do absolute ruinous things as throwing a grenade into a relationship. And Trump threw a grenade, and, 145% tariffs means that Americans are going to pay double for products that they're buying from China, and that's a significant thing. And it's already caused a job loss in my state because we're down, no ships coming in, no longshoreman jobs, no trucking jobs itself. So yes, there's always a spectrum of action, but I think that what he has proposed would be really ruinous for Americans. Hopefully this will get resolved, that he'll start to see pressure from bond markets as he did the other day, and that this will restrain his madness. We hope that we will be successful in that regard.
I have a little bit of a curveball here, if I may digress for a moment. Governor.
Get ready.
And well, I don't know how you're going to answer this, because Washington State, I don't believe you have an income tax, right? You made me think about the arson putting out the fire. You made me think about the SALT deduction, right? Because President Trump and the Republicans capped the SALT deduction that had been American tax policy for over 100 years in 2017 with the TCJA. And now there's a question about whether or not it survives or in what form it does. I wonder what you think about that as a state, as a former governor of a state that doesn't have an income tax. Does it seem fair to allow state and local taxes to be deducted? Does it avoid double taxation, or do you think that we should have a cap?
It's something I haven't really thought that much about. It's one of those things that when you have a disaster looming, you pay less attention to your parochial issues. I will just say I hope it gets worked out. I will say that. And I hope that we don't end up killing clean energy jobs just to finance tax cuts for the rich. That's the thing that I'm focused on. More parochial issues, to me, are subordinate. And the national economic climate is so at risk right now. That's what I think we got to pay attention to.
All right, so let's go there, because your team did share with us a report from Climate Power. You work with them, and it talks about clean energy jobs in particular created and those that might be clawed back as a result of President Trump's policies, executive actions, tariffs, and more. I will say, coming off of Milken and some of the discussions that I had with folks when it comes to clean energy, green energy, in terms of investing, many said it's going to continue because if you're a global company, you have to think about it on a global level. You have to think about it beyond a 4-year presidential term. And, just companies in many ways, their initiatives will continue going forward. But what's important about this report? What do you think our Bloomberg audience needs to know?
Well, what I think the audience needs to know is that we ought to be very optimistic about the clean energy economy. The growth is spectacular. And the reason is technology is advancing at such a rapid clip. The cost of solar energy has come down 40% in the last 10 years. Wind continues to come down. We have 10 times as much installation as we did 10 years ago. So the rate of the reindustrialization of America through renewable energy is quite profound. But unfortunately, the president, because he has this phobia or mania, he says wind turbines cause cancer, which is just nuts. It just causes jobs all over America. And that ideological fixation has already cost us or jeopardized 62,000 jobs in the United States, which is a spectacular way to shoot yourself in the foot. And the thing that's so disappointing to his multiple efforts, these are multiple efforts. He threw 1,500 people out of work who were building an offshore wind turbines off the East Coast with 24 hours notice. And he's doing that by refusing to permit these clean energy sources, by attacking the tax policies that allows these industrial jobs to be created. It's just really killing the number one job creator in the country right now is clean energy. So that's really threatening this engine of growth. And it doesn't make any sense whatsoever. Here's the thing that's so frustrating to me. He talks about he wants energy dominance. Well, if you want energy dominance, you shouldn't sideline some of your best athletes, which are folks building the clean energy economy. And so it's very disturbing, and I hope Congress will stop some of his maniac activities to hurt jobs in this country. 62,000 jobs, a lot of job loss.
Well, what about
it right in my state?
We were just talking to Nancy Lazar from Piper Sandler. She's one of the most well-respected economists in the country, and she was applauding a reshoring of manufacturing jobs. Is that not something that you could be optimistic about, that you think might benefit, the people of Washington State, the people of the United States of America?
Well, there's two separate issues here. I think it's important to keep them distinct. There's the tariff issue that you're thinking of that potentially could get some reshoring. If that someday could happen, that would be a fine thing. What I'm referring to is efforts to basically kneecap these new industries in a dozen different ways, starting by literally shutting down the development and construction of these projects, like offshore wind, like his refusal to give permits for solar powers, like his effort to kneecap the Bonneville Power Administration, which is the group charged with the responsibility of building transmission lines so we can build these new energy generating capacity. Like telling the Pacific Coast we're not going to be able to move forward with offshore wind. So these are two separate issues. And what I'm addressing are the facial attacks on the policies that we know do grow these jobs domestically, including the tax cuts, which he and the Republicans are threatening right now, to stop the tax breaks to allow these industries to grow, just to give it folks to tax cuts for the wealthiest folks amongst us. And that's probably one of the most dangerous things going on right now.
Governor Inslee, just got about a minute left here. I mean, what we often find, in terms of coverage of global financial markets is that money tends to go where it makes sense. And ultimately, do you have enough faith?
True.
No, it just in terms of, if investors can make money, they're going to go there. If it makes sense, investors will continue to commit to green initiatives. And a lot of companies do think it still makes sense. Might that pick up the slack, even if the political environment isn't supportive at this point? And just unfortunately got about 40 seconds here.
Yeah, listen, clean energy, this revolution is going to continue. There's no question about the technologies, the cost curve coming down. This is going to continue. But these policies that the president wants to embrace, and to some degrees Republican Congress, is going to retard that pace of change. And we're in a race right now. Look, we're a race for jobs. We're a race for the climate crisis won't make all our towns burn down in the West, too. We're in a race. We don't want to slow down. We're going to win, but we'd rather win fast rather than slow.
All right, we're going to have to leave it on that note. Jay Inslee, thank you so much. Former governor of the state of Washington 3 terms, and a former member of the U.S. Congress, joining us here on Bloomberg Businessweek. He also leads the Accountability Project at the policy and lobbying group Climate Power.
And safe to say beloved in the Pacific Northwest.
I love the Pacific Northwest. Having just gone to Seattle in the last year, pretty stunning.
I feel like you spent, 2 or 3 weeks out west just now?
Well, a week.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.